Hi everyone, Claire Smith here, Vice President at Stablepoint Partners, with an update on the much anticipated Fed meeting and their decision to make their first rate cut of 2025, lowering the Fed funds rate by 25 basis points to a range of 4% to 4.25%. Now this move was definitely expected, no surprises there, but the notable piece is that the Fed signaled 2 more rate cuts for the rest of the year. The reasoning here was a softening labor market and elevated inflation. So Chair Jay Powell described this decision really as a risk management move with the aim of supporting employment without letting inflation run too hot. So really what the central bank is clearly trying to do is just strike a balance between supporting growth and then also maintaining price stability. So now the question is, how quickly do rate cuts impact actual borrowing costs for consumers? So short-term savings rates adjust almost immediately, like your high yield savings or your money market funds, and then loan products tied to shorter term benchmarks like credit cards may lower relatively quickly as well. And then loans tied to SOFR, so your secured overnight financing rate, like a HELOC or a securities-based line of credit, for example, they might have a monthly or a quarterly reset. Differently, when it comes to longer term loans like mortgages, that's more of a lag in reflecting lower rates because mortgage pricing is driven by longer term treasury yields. And those respond to broader market forces like investor expectations around inflation and economic growth, which are definitely not necessarily lockstep with Fed rate cuts. But overall, the markets responded positively to the news as we expected. On Thursday, all 3 indices closed at new all-time highs. So really, where do we go from here? The market is pricing in these rate cuts, and as we know, the market is forward-looking. So with a hot market and quick run-up since earlier this year, negative news could have a sharp reaction. So we like to stay diversified, as you know, especially in this environment. On the other side of things, on the Stablepoint client side, we're already getting organized ahead of year-end planning and action items. So you may be hearing from us soon on things like required minimum distributions, fall and Q4 scheduling for meetings, and of course, year-end tax planning. But we're looking forward to connecting soon, and always, if you have any questions, feel free to reach out. Thanks.